Hi all, today we are going to discuss about types of shares. Share represents a unit of equity ownership of a company. Shareholders have a right to participate in the management of the company, and they can receive dividend according to the types of shares. And also, if there is any loss in the company, they should bear that loss also. In simple words, shareholders hold a percentage of ownership according to the proportion of the shares they have. And also, they are one of the owners. They can try to participate in the management of the company. They can voting rights also. Um, Equity shares and preference shares are the most popular shares prevailing. Um, Next is first one is equity shares. First one is equity shares. The equity shareholders are the real owners of the company. They have voting rights and they have a right to participate in the um, they have right to participate in the company management. um, Actually, equity shares are easily transferable, and these shares are traded in the stock markets. Equity shareholders only have voting rights. They have right to receive dividends according to the profits earned by the company. Next one is bonus shares. Bonus shares are those shares which are issued to existing shareholders at a free of cost. It is just like a bonus to their shareholders. Next one is right shares. Right shares can provide new shares to existing shareholders. It is issued at a particular price within a specific period, and it is being actually it is issued before other shares are going to trading in stock markets. Next one is sweet equity shares. If an employee of a company made a significant contribution, the company have to reward. So instead of giving cash rewards, company will give sweet equity shares to those persons who are making significant contribution and helpful for the company's growth. Next is voting and non-voting shares. Majority of the shares carry voting rights. The company in some shares, the company will make an exemption from voting rights. These type of shares can issue to the shareholders. Dividend shares. Instead of paying dividends to the shareholders, the company will issue shares instead of providing dividend in cash. Next one is growth shares. If a company have an extraordinary growth rate in a particular year, the company will decide and instead of providing dividends, the company will provide these type of growth shares to the investors. Value shares. These shares market price will be lower than the intrinsic value in the stock market. They have to expect the prices to be increased in the near future. Um, Next is preference shares. Preference shareholders have preferential right in receiving dividend from the company, but they don't have voting rights. Also, in the event of liquidation, they have a preferential rights to receive their invested amount. Next is cumulative and non-cumulative preference shares. In case of cumulative preference shares, in a particular year, the company is not earning a remarkable profit, so company is not able to declare dividend at that particular year. But in the next financial year, the company is working well and they have earned some good profit. These cumulative preference shareholders can get present year dividend and also the last year dividend, that is called cumulative. Non-cumulative preference share means they can receive dividend for the current financial year only. If any year the company is not declaring dividend means it cannot be carried forward to next year. Next is participating or non-participating preference shares. Participating preference shares allow shareholders to receive surplus profit after payment of dividends by the company. But in the non-participating preference shares, they are eligible to receive only dividends. They are not eligible to participate in the surplus profits. Next is convertible or non-convertible preference shares. Convertible preference shares means they can either convert it into equity shares, but if the articles of association is allowed, they can convert into the preference shares into equity shares. Non-convertible preference shares means they cannot convert their shares into equity shares. Redeemable or irredeemable preference shares. Redeemable preference shares means after some period, company can repurchase or claim the preference shares at a fixed price and within a stipulated time. These types of shares can have maturity date. Irredeemable preference shares don't have that sort of facilities. Redeemable preference shares will be mentioned while issuing the shares, and it can be redeemable by the company at a fixed price and at the specific period. Irredeemable preference shares have to be with the shareholders. If the shareholder wants to sell, he can sell those shares. Thank you.